Welcome to InvestorHubX.com. When most people hear investing, they usually think about stocks or ETFs. But in reality, traders can trade almost anything. That's why technical analysis is such a valuable skill to learn. Because once you understand how markets behave, those skills can often be applied across many different types of assets. In this video, we'll explore the major financial markets traders use around the world, and help you understand how each market actually works. We'll talk about the stock market, the cryptocurrency market, the precious metals market, the commodity market, the Forex market, the index market, the bond market. If you find this video useful, please give this video a thumbs up and subscribe to the channel, as this helps us create more high-quality educational videos for everyone. Let's get started. The first market we'll talk about is the stock market. The stock market is one of the most well-known financial markets in the world, where people buy and sell shares of publicly listed companies. Examples include companies such as Apple, Tesla, and Nvidia. When you buy a stock, you are buying a small ownership in a company. Major stock exchanges such as the New York Stock Exchange, Nasdaq, the London Stock Exchange, and the Australian Securities Exchange help facilitate billions of dollars in transactions every single day. Currently, the global stock market is worth over $110 trillion, making it one of the largest financial markets in the world. Stock markets generally operate from Monday to Friday, during exchange trading hours. The stock market is popular among both investors and traders. Long-term investors often buy shares in strong companies and hold them for many years, while shorter-term traders attempt to profit from price movements over days, weeks, or even minutes. Stock prices are often influenced by company earnings, economic conditions, interest rates, major news events, and overall market sentiment. Overall, the stock market remains one of the most important financial markets in the world, and for many people, it is the starting point of their investing journey. The next market we'll talk about is the cryptocurrency market. The cryptocurrency market is one of the newest and fastest-growing financial markets in the world. Unlike traditional financial systems, cryptocurrencies operate on decentralized blockchain networks without relying on central banks or governments. The cryptocurrency market began with the creation of Bitcoin in 2009. And today, thousands of digital assets are traded around the world every single day. Currently, the cryptocurrency market is worth over $2 trillion, making it one of the largest emerging financial markets in the world. Some cryptocurrencies, such as Bitcoin, are mainly viewed as a store of value or speculative asset. Others, such as Ethereum, help power decentralized applications, smart contracts, and entire blockchain ecosystems. One major difference between the crypto market and traditional markets is that the cryptocurrency market operates 24 hours a day, 7 days a week, with no market closing time. This means traders can buy and sell cryptocurrencies at almost any time, including weekends and holidays. The cryptocurrency market is known for having very high volatility. Prices can rise or fall rapidly within short periods of time, creating both opportunities and risks for traders. Crypto prices are influenced by many factors, including regulatory news, technological developments, market sentiment, macroeconomic conditions, and even social media activity. Unlike the stock market, There are no company earnings reports or fixed trading sessions. Important news can happen at any moment, which can sometimes lead to sudden price movements. Today, the crypto market includes many different trading instruments such as spot trading, futures, perpetual contracts, and even cryptocurrency ETFs. Overall, the cryptocurrency market is considered one of the most innovative and disruptive financial markets in modern history, and it continues to attract traders, investors, institutions, and developers from around the world. The next market we'll talk about is the precious metals market. Precious metals include gold, silver, platinum, and palladium. For thousands of years, these metals have been valued because they are rare and difficult to produce. Today, many investors still buy precious metals as a way to protect wealth during uncertain times. Gold is the most popular precious metal in the world. In fact, the global gold market is worth over $13 trillion. Many people view gold as a safe haven asset, especially during inflation, economic uncertainty, or financial crises. When stock markets become unstable, investors often move money into gold. Silver is also very important. Unlike gold, silver is widely used in industries such as electronics, solar panels, and medical equipment. Because silver has both investment demand and industrial demand, its price can sometimes move more aggressively than gold. Traders and investors can access the precious metals market in several ways, including physical gold and silver, ETFs, futures contracts, and mining company shares. One advantage of precious metals is that they have historically held value over long periods of time. However, precious metals also have disadvantages. For example, gold and silver do not generate income like dividends or interest, and physical metals may require storage and insurance. Overall, the precious metals market remains one of the oldest and most trusted financial markets in the world. The next market we'll talk about is the commodity market. Commodity markets involve the trading of raw materials and resources that help power the global economy. These commodities include crude oil, natural gas, wheat, coffee, corn, copper, iron ore, and many other important resources. One of the most important commodities in the world is crude oil. Oil plays a major role in transportation, manufacturing, energy production, and even inflation. Because of this, oil prices can affect economies all around the world. Commodity prices are mainly influenced by supply and demand. For example, bad weather can reduce crop production. Wars and geopolitical tensions can affect oil supply, and economic growth can increase demand for industrial metals like copper and aluminium. Commodity markets are generally divided into three major categories. The first is energy commodities, which include oil and natural gas. The second is agricultural commodities, which include wheat, corn, coffee, and soybeans. And the third is industrial metals, which include copper, aluminium, nickel, and iron ore. Today, traders and investors can access commodity markets using futures contracts, ETFs, CFDs, and resource company shares. One advantage of commodities is that they can help protect against inflation. Commodity prices are also heavily driven by real-world supply and demand, which makes them very important in the global economy. However, commodity markets can also be highly volatile. Prices may be affected by weather, natural disasters, wars, government policies, or sudden changes in supply and demand. Overall, the commodity market plays a critical role in the global financial system because many industries and economies depend on these raw materials every single day. The next market we'll talk about is the Forex market. Forex, also known as the foreign exchange market, is the largest financial market in the world. In fact, the Forex market trades over $7.5 trillion every single day. Forex trading involves buying one currency while selling another currency. Currencies are traded in pairs, such as the euro, the pound, the yen, and the Aussie. The Forex market operates 24 hours a day, 5 days a week, as trading moves between major financial centers including Sydney, Tokyo, London, and New York. Forex prices are mainly influenced by interest rates, inflation, economic data, and central bank decisions. One major feature of Forex trading is leverage. Leverage allows traders to control larger positions using smaller amounts of money. While this can increase profits, it can also increase losses very quickly. Some advantages of the Forex market include very high liquidity, low transaction costs, 24-hour trading, ability to trade rising and falling markets. However, Forex can also be risky because markets move quickly and leverage can magnify losses. Overall, the Forex market is one of the most important financial markets in the world, because global currencies are essential for international trade and the global economy. The next market we'll talk about is the bond market. The bond market is one of the largest financial markets in the world. In fact, the global bond market is worth over $130 trillion. Bonds are essentially loans. When governments or companies need to borrow money, they issue bonds to investors. In return, investors receive regular interest payments. Government bonds are generally considered safer investments, while corporate bonds usually offer higher returns but also higher risk. One important feature of bonds is that bond prices are heavily influenced by interest rates. When interest rates rise, bond prices often fall. And when interest rates fall, bond prices often rise. Many investors use bonds because they can provide regular income, lower volatility than stocks, portfolio stability. However, bond returns are usually lower than stocks over the long term, and inflation can reduce the value of fixed interest payments. Today, investors can access the bond market through government bonds, corporate bonds, bond ETFs, and bond futures. Overall, the bond market plays a very important role in the global financial system, because governments, businesses, and investors all rely on borrowing and lending money. If you find this helpful, please visit InvestorHubX.com for more lessons just like this. We are building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodities, precious metals, property investing, and more, step by step. You will also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. To summarize, today we explored some of the major financial markets traders and investors use around the world. We learned about the stock market, the cryptocurrency market, the precious metals market, the commodity market, the Forex market, and the bond market. Each market has its own characteristics, risks, advantages, and opportunities. Some markets are known for stability, while others are known for high volatility and rapid price movements. We also learned that many factors can influence markets, including interest rates, inflation, economic data, supply and demand, government policies, and global events. And most importantly, we learned that technical analysis can often be applied across many different markets, because all markets are ultimately driven by human behavior, fear, greed, and supply and demand. Understanding how different markets work is one of the first important steps in becoming a better trader and investor. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.